Well, the California Public Employees Retirement System is at the forefront of a national crisis that has public pension funds struggling to meet their obligations to more than 19 million active and retired state workers. Calpers lost $70 billion in the credit wipeout of 2008 and 2009, and now CIO Joe Deere is hoping to rebuild the nation's largest public pension fund by embracing riskier investments. Joining us now with more, Edward Robinson of Bloomberg Markets Magazine. He joins us from San Francisco. Ed, thanks so much for coming on today. There's a lot going on here, especially about the CIO Joe Deere. He isn't shying away from risky investment strategies in his bid to rejuvenate the #1 U.S. pension fund. Why is Deere poised to take more risk at a time when the markets are so volatile?
Well, he really doesn't have much choice. Calpers is obliged to earn 7.75% on its assets every year to meet its obligations to its members. And as you know, the stock market has been flat for the last decade. Interest rates that are almost near zero. The U.S. economy is wobbling. So he feels that he has to look for growth in other more riskier markets, emerging markets, commodities, currencies, other types of investments. He's got to hit that 7.75%.
You know, a lot of studies are out there now, and some of them say that Calpers may be underfunded by as much as $240 billion, and that places it at the forefront of the state pension crisis. What's at stake if Calpers can't reap outsized returns in the markets?
Well, increasingly, Calpers will have to turn to California taxpayers to cover the payouts that they're obliged to make to their beneficiaries. As you know, California, like many other states, is having enormous difficulties in passing its budget. It has a $19 billion budget deficit this year. So the last thing the California taxpayers really want to do is fork over more money to cover Calpers' bets in the capital markets. So that's why Deere's investing strategy is crucial going forward, because it'll affect the entire budget of California.
Well, you know what? In your story, there's an interesting plea from Mr. Deere. He was telling a lunchtime crowd, we can take control of our destiny. We can make concrete improvements. How critical is it for him to try to fire up his base?
Well, that's a very important part of his job, and one of the reasons the Calpers board hired him back in early 2009. He's doing a lot to try and break down the walls between the different asset management teams inside Calpers' investment office.
How high are those walls?
Well, for a very long time, these teams, members of these teams, didn't communicate with one another. The fixed income team was focused on bonds, the equities team was focused on stocks, and they never really got together and met and talked shop. So Deere really wants them to start to do that, to get a more holistic understanding of risk on a global basis, and just to trade and swap ideas on how to fix some of the problems that they're encountering.
And might I ask, as opposed to trading and swapping ideas, also at least asking the administrative governing board maybe a little bit more trading in ETFs and derivatives on an even bigger scale than what they're doing right now?
Yeah, that's a really fascinating part of what Calpers is looking at going forward, is increasingly as it takes more risk in emerging markets and in different types of securities, there'll be a lot of pressure to try and hedge that risk by using new instruments, or relatively new instruments, like exchange-traded funds, like derivative contracts for futures and carry forwards on currencies. And so what I think you might see in the next year is Calpers really start to look into creating more of a trading operation that will try and neutralize risk on a daily basis, kind of what macro-oriented hedge funds do right now. That's something that's still in the works at Calpers, but they're studying it very closely.
Ed, how will Deere's moves impact other public pension funds?
Well, Calpers is the big gorilla. I mean, they really set the pace for a lot of public pension funds around the country. They were pioneers on the corporate governance movement, shareholder rights movement. They were one of the first funds to go into private equity and alternative investing. So when Calpers makes a big, bold move, a lot of other public pension funds take that as a cue and tend to follow. Will also have an impact on asset managers who are trying to get mandates from these funds. If they see Calpers starting to look at different types of strategies, they may alter the way they approach public pension funds in trying to get mandates.
So, Ed, I'm looking at Calpers as the rising tide that lifts all boats, but also if Calpers sneezes, everybody else gets a cold. Is that about right?
Yeah, you could say that.
All right. Edward Robinson, Bloomberg Markets Magazine, joining us live from San Francisco. Ed, thanks so much. Appreciate it.